That's where it comes to the finance, because typically for banks, do they like 35 square metre apartments?
No, not at all. And in actual fact, you need to be really careful when you're looking at properties that are even under 50 square metres, because there are only 2 or 3 lenders out there who are actually going to lend on properties that are 35 or 50 square metres. Typically their policy will state that they would like the property's internal floor space to be over 50 square metres or over 40 square metres, and that's not including the balcony, and it's not including the car park or the storage or anything else. It's the internal floor space of the actual studio. So it's really important, and you need to make sure that if you're looking in that space, if you're looking in that studio apartment 1-bedroom space where the properties are that size, you need to make sure you're with the right lender up front, because otherwise you really don't have a valid approval if you're not with a lender who won't approve that type of property.
And so it's a bit like Anna's email before, is to try and go and buy a property and to exchange on it without getting pre-approval. And as soon as you think there's something different about the property, you should be telling your bank to see if it's going to be an issue.
Absolutely. So even looking at things like postcode, if you're looking at buying in the inner city or in a little village area or rural, you need to be checking that there are no postcode restrictions on that particular area with the lender that you're dealing with, because you will find out sooner or later that if you do proceed with that type of property, the bank may actually request a larger deposit from you, which you may not have, and that could see you in a very, very difficult situation.
Now, we're talking to Tony earlier on, saying quite often that the agents' fees, having cheap agents' fees isn't necessarily the best thing, and quite often it's a false economy because you might not get so much of a high price. When it comes to mortgage rates, is the cheapest mortgage rate the most important thing, or is there a bigger picture to that? No,
there's definitely a bigger picture. Really, look, you have to look at the overall package. You need to make sure that just because it's the cheapest rate doesn't mean that their fees don't stack up and end up being probably middle of the market or highest rate in the market overall. And it's really hard to do this type of research on your own and to work out, where the hidden costs are.
And so we'll pull up a graphic. We've got about a dozen things. We'll just look at 6 to start with of some of the hidden costs that you need to look out for and try and add into the cost of the mortgage.
Absolutely. So the first one is valuation fees. You definitely need to look out for valuation fees. If the property is a residential property, it may be a small valuation fee, but if the property is a commercial property, you're probably looking at paying upwards of $1,000. Settlement fees, what are these going to cost you overall? Are there any extras that the lender has added in just for their purposes? Government fees and charges, these are standard fees and charges. These are things that we really can't change, but they are in your contracts. You do need to be aware of them. Lender's mortgage insurance. Now if you shop around, you can definitely save on lender's mortgage insurance. I would say that you can save $2,000 to $3,000 on lender's mortgage insurance by having a broker shop around for you and find the lender with the cheapest mortgage insurance if you're in that type of category. Monthly fees and yearly fees. Look, some loans are actually packaged up and you've got one annual fee, but you need to be aware of all the little hidden fees and charges, and you need to let your mortgage broker or solicitor read the fine print.
Yeah, because it's just not a simple thing of just going to get the mortgage and that's it. Because people generally find out, especially when they're trying to break out and go through all these exit clauses and the rest of it, that's when a lot of the costs kind of suddenly hit home, don't they?
Yeah, that's right. You'll see in your loan contracts that there are about 2 or 3 pages of potential fees that the lender could charge you over the life of the loan, and you need to be aware of each one of these fees, because you will, over the time of your loan, make changes, whether it's switching from fixed to variable or whether it's breaking a fixed rate. There are huge fees that could really implicate you from selling a property or refinancing to another lender. You need to be aware of all these fees up front, so that you know that when you go to make a change, it is going to cost you money, and it needs to be taken into consideration in the overall rate for the life of the loan.